Welcome to the Business Power Hour with Darren and the Music Man. Brought to you by Friend Entertainment USA, producing the best concerts for charities and corporations for over 30 years. And CBMS Consulting Services, control your business before it controls you. In association with Area 22 Productions, your multimedia streaming network. Now, here is Darren and the Music Man. Good evening, everybody. Welcome to the Business Power Hour with Darren and the Music Man. If you notice, tonight I'm Darren, and there is no Music Man here tonight. Unfortunately, Norman has come down with an illness. We wish him a very speedy recovery. It's going to be a lonely show without my partner. Good evening, everybody. Welcome to the Business Power Hour. We'll endure through this, but more importantly, let's make sure that Norman is fine. Norman, we wish you well. And we have somebody here that wants to say hello, Norman.
So you know, Norman, I never go in front of the screen. You know, I'm the woman behind it. But for you, I'm doing this. And you've been a friend for a long time. I just want to wish you a speedy recovery. Don't bother all the people around you and annoy them. Just get well quickly. We want you back here.
But that's how we know he's getting better. If
I
he's
know.
Annoying people, we know he's getting better.
Absolutely,
right? Okay?
absolutely.
So Norman, we look forward to seeing you soon. I'll probably be up there tomorrow to see you. Okay, but again, we wish you well. Get better soon, you know, and come back to the show as quickly as you can. All right, my friend.
Okay.
All right, so tonight, we got a great show tonight. You know, in our series of businesses that we're working with and stuff that we're doing, as you know, we touch on a lot of different subjects. And tonight's a different type of subject than what we've been working on over the last month or so, doing a lot of marketing companies and things like that. But we're going to be talking about mortgages tonight, but in a different sense. I have with me tonight a very nice guy, great guy. Tim and I actually have common friends from our childhood. But I want to introduce Tim Kennedy from the U.S. Mortgage Corporation. Hi, Tim.
Welcome. Hi, how are you?
How you doing?
Thank you very much. Thanks for having us. I'm sorry I'm missing Norman tonight.
Yep. Yeah, me too. Me too. Yep. You would have had a lot of fun with Norman. So, Tim, tell us a little about U.S. Mortgage Company and what you guys do. U.S. Mortgage Corporation.
The U.S. Mortgage Corporation. So, I've been in the mortgage business since 1994. Right. I had my own mortgage broker shop. It was called Dana Funding. It was a family business. And you know, back in 2008, 2009, like everybody else, we shut the doors, and I was looking for work. Okay. I interviewed with multiple mortgage companies. Wasn't happy with what they were telling me, and I had lunch one day with Stephen A. Milner, the CEO and founder of U.S. Mortgage Corporation. Okay. And through that time period, with all the doom and gloom that was going on, he never talked about doom and gloom. He never talked about going out of business or anything like that.
So was that the thing that said, "Hey, I want to work with this guy," because he was very positive, and he was looking, from what you're telling me, it sounds like he was thinking of the future and not of today.
All he talked about was growth and expansion. And at the time, that was about 10 years ago. And at the time, we were probably licensed in about 10 to 12 states. Okay. Today, we're in 47 states, including the District of Columbia. Wow. We're a direct lender. Wow. Okay, direct servicer. Yeah, so it was a great decision for me to jump on board with the U.S. Mortgage Corporation.
So U.S. Mortgage Corporation is a very large corporation, and you do mortgage lending, right?
We do mortgage lending, yeah. So, all types of mortgage lending.
So you said that before you started working with them, you had your own family business.
Yes, yeah.
Okay, is this something that your parents did or your dad did? Or,
well, it's a funny story. I was a manager at Airborne Express. Okay. Okay, during the day, right? And
Silver trucks, right?
Right. Yeah, Silver trucks, Airborne Express. And my father-in-law was a great man. Right. Had a home improvement company. So during the day, I worked for U.S. Mortgage, and at night, I worked for the home improvement company selling windows and siding. All right. I believe it or not. And we came together as a family. We said, you know, what are we doing windows and siding for? Why don't we get into the mortgage business? And, you know, we had telemarketers. Monday night, they were telemarketing for home improvements. They came in Wednesday morning, and they were telemarketing for mortgages. Right. And we had a great run, you know, and it worked out well.
Well, you said it's 2004 you started, right?
1994 we opened up.
Oh, 1994, which is really the beginning of the boom.
Yeah.
When housing was really taking off on Long Island. And all the way up to like 2008 when it crashed.
Right.
Right.
So at that point, we closed the doors, and I was looking for a place to work. I interviewed with multiple mortgage companies. I didn't like what any of them had to say.
Right.
They'll pay you this, we'll pay you that, and I would say, but what about this Financial Reform Act? What about Dodd-Frank?
Right. So let's back up a second. You worked for Airborne Express as a supervisor, right? And we had a discussion before the show, and that you went to Stony Brook University, right? As a matter of fact, you went to Stony Brook with some people I went to high school with. Mike Stellato.
Small world.
Right, Mike Stellato, if you're watching, hello. Mike, Lance, if you're watching. Lance is also a Facebook friend of mine. So you graduated from Stony Brook, and then you went to work for Airborne?
Yeah.
Okay.
First job out of college. Yeah.
First job out of college, you went to work for Airborne, you were a supervisor with them.
Yeah.
Right? And then they got gobbled up by DHL. And
I was gone by then.
You were gone by then, okay. So what made you leave Airborne? Was the whole family business and getting into the mortgage business?
It was time to make a change, time to make a commitment. And the mortgage business was taking off, and it was time to do that full time.
You had this thing where, okay, I'm working for Airborne, international company. I'm sure you had a living, right?
Sure.
You're making a living, and you said, I don't want to do this anymore. What made you say you didn't want to do it anymore? You wanted to be on your own. You wanted to be your own boss.
It was a family business. We were self-employed entrepreneurs. And the mortgage business was taking off, and that was the direction to go in.
Okay.
All right. And it was a great decision. It was a great choice. I didn't regret any decision.
Yeah, and the reason why I asked that is because there are a lot of things that go on with people, and it's like, hey, you know what? Why did he leave Airborne? Because 14 years later, he's out of a job.
Right.
It's just like, well, woulda, coulda, shoulda. You had a feeling, you had a gut, you wanted to go in a direction, and that's where you went, right? So that's fantastic. So you got with U.S. Mortgage, and tell me the unique things that U.S. Mortgage does. We had a discussion. They do a lot of different things, right?
We're a direct lender. Okay. We're a direct Fannie Mae seller direct. Okay. We're direct with VA. We do VA loans, 203K loans, renovation loans.
So you loan on everything. So
everything,
From the family just getting started out to a vet who's coming home and now he's buying his first home. You do all the different type of lending. Right. But you do a very special type of lending.
And the reason we're here tonight is to talk about reverse mortgages. I specialize in reverse mortgages for seniors.
Okay. So reverse mortgages, tell me about reverse mortgages. How did they come about? I mean, because you hear this all the time. You see the TV commercials, right? And these celebrities going, "Oh, reverse mortgage is like the greatest thing in the world," right? And you sit there and go, "Well, what is a reverse mortgage?" It doesn't sound right. It's like, who's paying who?
Right.
How did they come about? What? We all know something comes out of something is created because of necessity. There was a reason why something came about. Tell me about how reverse mortgages came
back in the 1980s, Ronald Reagan was president. Okay, we've got the great generation, greatest generation of all. Where are we going to put them all? Right. They have to stay in their homes. Right. There isn't enough nursing homes or assisted living homes to put them all in. So the idea behind the reverse mortgage was, okay, let's keep the seniors in the house, let them age in place, and maintain financial independence.
Okay. Right. So how does that work? Because to me, it sounds like, well, it sounds like they're refinancing their house. So if they have the house paid off or close to being paid off, they can go into a reverse mortgage situation, correct?
So you see the commercials, right? And I don't necessarily agree with the commercials because the first thing they'll say is get a reverse mortgage, pay off your mortgage, no monthly payment.
Right.
Okay. Yes, that's a benefit of a reverse mortgage, but it's not the whole story.
Okay.
Right.
So tell me the story. All right. Tim, I want to hear the story. I want to because to me, I'm an accountant, right? So
you're a numbers guy.
I'm a numbers guy. So if getting a reverse mortgage and somebody's giving me money, there's got to be somebody standing there going, I want money back.
Of course.
Right? So how does that work?
So here's the premise, right? You have a house, it's free and clear, or you have a mortgage, right? For most seniors, they're on limited income, Social Security, pension, right? Maybe they saved money, maybe they didn't. Or maybe they didn't save enough. Right.
Which is usually the case.
Which is usually the case in today's day and age. So the idea is they take out a reverse mortgage. So you have a mortgage now?
Yes.
Every month you make a payment to the mortgage company, right?
Oh, absolutely, yeah.
With the reverse mortgage, the mortgage company is making a payment to the homeowner.
So we'll just use round numbers, right? So say my mortgage was $1,000 per month right now. Okay, and I'm paying $1,000 a month to pay the bank off. you're telling me that if my house was paid off, right?
Well,
and
not necessarily paid off.
Oh, not necessarily paid off. If I went and got a reverse mortgage, now the bank's going to start paying me $1,000 a month.
If that's the way you wanted to set it up. I mean,
Right.
we could spend hours on this thing,
Yeah,
right?
yeah.
But the premise behind it, if you're a senior, you're 62 years old.
Oh,
okay,
that
so
was my next question.
You're
Is there an
62
age
years
limit?
old, right? The youngest borrower is 62, right? That's your primary residence. You're still responsible to pay your taxes and insurance.
Right, okay.
But the idea is, for example, you have a $500,000 house. You're 62 years old. We'll use easy math. They qualify for 50% loan to value.
Okay.
So I would give them a reverse mortgage where they qualify for $250,000.
All right.
Now they could borrow that money multiple different ways. They could take a lump sum up to 60%
Okay.
of that $250,000. They could let that $250,000 just sit there on a line of credit.
Right.
And I want to get back to that because this is one of my key points.
Okay.
Or, like you said, they could set up a monthly payment, and for the rest of their life, they can get $1,000 a month or whatever number they qualify for.
Right.
They get $1,000 a month or whatever number that is for the rest of their life.
So basically, if we'll go with your number, right?
Mm-hmm.
$250,000 we're starting with. I now want to, I'm 62 years old. I want to now draw down on my $250,000.
Mm-hmm. Okay.
And all I need is $1,000 a month to make sure all my bills are paid.
Perfect.
Okay? So now I start taking it $1,000 a month.
Right.
Well, now I'm 92.
There you go. God bless you.
Right? Yeah, God bless you, right? But what you're telling me is that I only qualified for $250. So it caps out at $250?
No. As long as you're living in the house,
Right?
paying your taxes and insurance, and maintaining the property,
Right.
okay, you'll get that $1,000 for as long as you stay in the house.
Okay, so what if I go past value of the house?
There you go. Good question.
That,
right? So-
again, numbers. I'm sitting there, numbers. Somebody
So
wants their money back at one point.
There's two parts of a reverse mortgage, okay, that I'm very passionate about.
Okay.
And it's why I picked this particular field with all the other mortgage products out there. This is why I zeroed in on the reverse mortgage. There's two things about the reverse mortgage. Number one, it's a non-recourse loan. And that's
Okay.
kind of what you're getting at.
Right.
Okay. So you have a senior, they take out a reverse mortgage, they're in the house, God willing, they're in the house forever. Because you're not making monthly payments, the balance of that mortgage eventually may exceed the value of the house.
Right.
It's a non-recourse loan. You're only responsible to pay back what the house sells for. It's a federally insured loan.
Right.
The federal government now is responsible to pay that shortfall.
So if you're lucky enough to live way past all of that,
Right.
you get free money, basically.
Well, you're living in the house rent-free, right?
Rent-free.
Because you're not making monthly payments.
Right.
Now let's flip that, because this is the part where people get concerned. Because
Well, hold on, though.
Right.
If I really wanted to get, because you said we can talk about hours and hours
Yeah,
and hours about all the details on how this thing
Yeah.
works and all the configurations.
Let's just keep it simple.
If if I wanted to get a hold of you and I wanted to contact you after tonight,
Sure.
how would I do that?
Well, my email address is tim.kennedy@usmortgage.com. My office number is 631-750-0520. And I have a cell phone. Call me on the cell, 516-729-6040.
All right. Thank you, Tim. All right. So now, let me ask you this question.
Well, let's go back to the non-recourse, if you don't mind.
Sure.
Okay?
Let's
Because
do
here's
that.
one of the misconceptions about a reverse mortgage. Right?
Okay.
The bank owns my house. The
Right.
government owns my house.
Right.
Furthest from the truth. You always own your home.
Okay.
So let's say, for example, you take out a reverse mortgage today. A year down the road, 2 years down the road, you're done with Long Island, you're done with the winters, you want to sell the house and relocate to Florida.
Right.
Okay, you sell your house, you pay back whatever money you borrowed from the reverse mortgage, any equity left in the house
Is yours.
is yours.
Okay.
Okay? If, God forbid, right, your mom and dad had a reverse, they
Right.
pass away, you pay off the balance of the reverse mortgage, any equity left in the home will go to the estate or to
Right.
the children. Right?
Okay.
Just like if they had a forward mortgage.
Right.
Okay, it only gets tricky if and when the mortgage exceeds the value of the house.
Right.
Because now you're responsible to pay back what the house sells for, and anything over that, the federal government
Covers.
covers it. Because it's
Oh, okay.
federally insured by the federal
I
government.
got you.
Right.
I got you. So the estate wouldn't be responsible. So
Right.
I'm going to throw a scenario at
Go
you.
ahead.
I do a reverse mortgage, right? 10 years from now.
You're going to call Tim Kennedy, right?
I'm going to call
Right,
Tim
okay.
Kennedy 10 years from now. Tim, I'm going to call you and say, hey, I'm 62. I want to do a reverse mortgage now. Now, I live long enough to exceed the value of my house.
There you go.
But I have enough assets to pay back the whole loan.
If you want to do that,
But I die. all right?
Yeah.
So now I pass away. My family now has the money. You know how family is when they get a hold of your money, right? Is the estate responsible for paying back the full amount if you have other assets that can cover it?
It's a non-recourse loan.
So it's
you're only responsible to pay back what the house sells for.
That.
Right.
Okay. I want to, it's that old thing. You got to tell everybody 100 times to make sure that they understand that the only thing you're responsible for, and this is Tim Kennedy telling you, and he's one of the top guys in the country doing this. And how do I know that? Because Tim and I had a conversation earlier today. He is an elite reverse mortgage lender, right? And tell us about that, Tim. What does that mean? You're an elite because you got that nice little sharp
I got the CRMP pin, right?
Right, CRMP pin.
So Darren and I spoke earlier before the show, and we have mutual friends, right?
Yep.
I played football with Mike at Stony Brook.
Mike and Lance.
So, I always get teased, right? But there's three things I worked very hard at in my life. Number one was 1982. I played in the East Islip football team. We won the Rutgers Cup.
Okay.
Voted #1 in New York State, right? Probably one of the hardest things I ever worked for.
Right.
1990, I met my wife.
Okay.
Married 28 years, 3 children.
God bless you.
Right? One's a second-year law student, and the other 2 are navigating their way through undergraduate studies. Right? The third thing I worked at was the CRMP designation. It's taken me years to do. Right? You needed an X amount of years of experience. You needed X amount of closed loans.
Right.
Okay. You needed X amount of continuing education classes, an ethics class. I had to fly all the way to San Francisco just to take an ethics class, right? Okay. And then I had to take a 2-hour exam. So I've been beating this thing around for the last 2-3 years, and I just got my designation last month.
Well, and congratulations on getting your designation.
Thank you.
So the CRMP designation, I've never heard of before. All right, and you're telling me, and what does it stand for? CRMP.
Certified Reverse Mortgage Professional.
Right? Okay. Now, that sounds like something a lot of lenders would have. A lot of people work in the industry.
So let me ask you a question. How many loan officers do you think there are in the state of New York?
Oh, it's probably thousands.
Okay. How many loan officers do you think there are across the country, nationwide?
Oh, maybe 1 million.
Okay. Just to give you an idea of the magnitude of this, there's only 155 certified reverse mortgage professionals across the country.
So that makes you elite.
I would hope so.
Elite, right? So it makes you, the LeBron James of reverse mortgages, right? If you think about it, right?
Much, yeah.
You're in that type of company.
I can't walk and chew gum at the same time, but I'll take LeBron James.
That's just a comparison, right? So you're really up there. You're one of the guys that you're a go-to guy when it comes to this. When you walk in a room and you start talking reverse mortgages, you know your stuff. You're not somebody just coming off the street.
Well,
going, hey, I just learned this, and let's go get it.
Yeah. Well, funny story. When I was making the transition at U.S. Mortgage Corporation, somebody said, "Tim, you do mortgages?" And I said, "Yes." Yeah. And I said, "Well, I need a reverse mortgage. Do you do reverse mortgages?" "Yeah, of course I do reverse mortgages." I had no idea. I didn't know how to spell reverse. Right? But I muddled my way through it. I learned how to do it. We closed the loan. And being able to help that senior couple stay in their home, age in place, maintain financial independence. I said, I got to figure out how to do this, and I need to become a professional at it. And that was, 8, 9, 10 years ago. Right. And I've been beating this.
You've been going at it. So it sounds like not a lot of people really focus on the reverse mortgage side of it.
It's very difficult because it's a difficult concept to comprehend. Right. Right. Just like you were saying before. What is that? What do you mean? So, but once you learn it, and I'm very passionate about it, because earlier we spoke about the non-recourse. The other part of the reverse mortgage, which nobody understands or can even comprehend, you might, because you're a numbers guy. Right. Is the fact that when you take out a reverse mortgage, and let's go back to the 250 balance you have. Right. Right. You take out a reverse mortgage. It's a line of credit. Okay. You take
now
money.
Let's explain. What a line of credit would mean to everybody. Okay. So everybody knows what a line of credit is. I'll give my definition of it.
Go ahead.
And give yours. Line of credit is the bank says, hey, we're going to lend you $250,000, but you can take it whenever, however you want. You can take $10 today. You can take $100,000 tomorrow. However you want to do it, you can draw down on it.
Same premise with the reverse mortgage line of credit. So let's say, for example, you have a mortgage, you pay off a mortgage, or you take a little bit out.
Right.
In this case, you have a $250,000 line of credit. The unused portion of the line of credit grows as it sits there. Did you ever even hear of such a thing?
No. Okay.
That-
Wait.
Like, is that unbelievable?
Wait. I deal with a lot of small businesses. Right. These small businesses, they go out, they get a line of credit. I get some clients that don't even use their line of credit.
Yeah.
And I tell them
Thank
all the time,
God. It's a safety net,
It's a
right?
safety net. And I tell them, you know what? You got to borrow on it every once in a while. Take it for a couple of days
Yeah,
and pay
put
it
it back,
back.
yeah.
Yeah, that type of thing. So they do that.
Keep it active.
Right? They
Right,
just
right.
keep it active. Because there are banks that will say, hey, it's not active. We're going to take it away from you. You don't need it. So, you're telling me is that if I get a line of credit, it's going to grow.
It grows.
So it grows how? So it's 250, and then every
Okay,
year that goes by, it gets bigger?
So let me tell you a quick story. I was at a house about 2-3 years ago. Client wanted a reverse mortgage. I go to the house, I look at the mortgage statement. They had taken out a reverse mortgage 10 years ago. They didn't even realize it. Like the couple was getting older in years and a little forgetful. They took out a reverse mortgage 10 years ago. $150,000 reverse mortgage.
Okay.
They used $75,000 of it. They spent. They left $75,000 on the line of credit.
Right.
Forgot about it.
Okay.
In a 10-year period, that $75,000 grew to $161,000 that they had access to as a line of credit.
Okay. I'm sorry, Steve. Thank you. So wait a second. So they actually they went up a third.
Yeah.
Right.
They more than doubled their line of credit.
Right.
Okay. And I sat down and I spoke to them and the daughter.
Right.
I said, you have a line of credit here.
Of $160,000.
I mean, I don't want to be, crude or whatever. I said, but when your parents die, that line of credit dies. Okay, so you have to use this money now for what you need it for.
Right.
They needed home care assistance, right?
So take that money and use it for that.
Use it for the home care. I said the dad was in a wheelchair. They were lifting him up steps.
Get a ramp built.
So call up 101 Mobility or whoever
Right.
and get the handicap accessibility. I asked the daughter, I said, how much money do you have to bury your parents when that day comes? She goes, we don't have any money. I said, well, there you go.
There you go.
I said, call up a funeral parlor. Let's get some prepaid funeral arrangements.
Wow.
But use this money accordingly.
So basically, the line of credit is similar to taking the monthly payment type of thing, where it's just going to continually grow.
Right. So,
Right.
so this is my goal or my motivation for 2018. Okay, is educate the elder law attorneys, the estate planners, the financial planners, the CPAs, the insurance guys, because the idea is today's reverse mortgage isn't a last-ditch effort to keep the senior in the house.
Right.
It's really now a financial tool as a retirement tool.
I gotcha.
Okay, because remember years ago you saw those commercials? Pay off your mortgage, no monthly payment,
Right.
no income check, no credit check.
Yeah.
Right, those days are over.
Oh yeah, big time.
Okay, there's now what they call a financial assessment.
That's what kind of caused the crash in 2008.
Well,
right?
this is different with the reverses, but that's one of the biggest problems with the reverse mortgage. We were giving reverses to clients that didn't qualify for a reverse.
And we were just giving them to them anyway.
And we gave it to them, and then down the road, we delayed the inevitable. They didn't pay the taxes and insurance, right? And the house was foreclosed on. It wasn't foreclosed on because of the reverse. It was foreclosed on because they couldn't pay the taxes and insurance.
Right.
Just like what happens today if you stop paying your taxes and insurance on your home.
They're going to
foreclose on your home.
Right.
Right?
Yeah, absolutely.
So my goal now is to educate the professionals, the masses that deal in the senior community. Because the reverse mortgage now is a retirement tool. Not everybody, it might not work for everybody, but I really believe that it should be part of every conversation.
Well, it absolutely should be every, I'm sitting there, matter of fact, I was in a client meeting yesterday where we were talking about succession planning with the company
There you go,
and one of the partners and stuff like that. So this should definitely be a part of that conversation with the partner that's going to be retiring. So that's definitely something I'm going to bring up. I just want to shout out to a couple of people that have joined us, Brian Cohen and Jordan Kaplan. Hey, Jordan, how are you, buddy? Mike Schmidt is watching us also, and John Fletcher. So I want to say hi to those guys. And you know what? If they want to get a hold of you, Tim, how are they going to do that?
There you go. Come on. So very easy. My email address is tim.kennedy@usmortgage.com. My office number is 631-750-0520. And I have a cell phone Call me anytime in the cell, 516-729-6040. Thank you.
So far we covered two areas, right? The line of credit and the
Non-recourse.
non-recourse.
The line of credit is key,
Right.
right? And the reason I'm pushing that is because it's all about longevity,
Okay.
right? You know, you and I, right, we haven't hit that point yet, but we're spending a lot of time saving for retirement.
Right.
It takes 20, 30, 40 years to save for retirement. You climb this mountain.
And even then,
right?
you're sitting there going, I don't
It's
have
not
enough.
right?
It's not enough.
But, you know, you climb this mountain, saving all this money for retirement, you retire.
Right.
You know, the hardest part about climbing a mountain is climbing back down,
yeah.
right? And coming back down the other side, you could lose that money in a blink of an eye.
Yep.
The reverse mortgage, okay, is your safety net. You know, take out the line of credit.
Right.
Don't touch it. Let it grow. If an emergency occurs, and now what? Or what if?
Right.
You have the funds. The third thing that I didn't mention yet, it's tax-free.
How is it tax-free?
Because it's coming from the house. It's tax-free.
Because you're taking out of the equity, right? So, but here's my question now, going back. I'm a numbers guy. House is worth $500,000.
Yep.
I've now borrowed $540,000.
Okay.
How can you tell me, based on how our government works, that extra $40,000 that I got out of the house is tax-free?
Well,
Because that's a capital gain, my friend.
Well, no, because that's your mortgage balance. You didn't borrow it, right?
Well, when the house is sold, now now I pass away.
Yeah, you're mixing two things.
Okay.
It's two different things. Okay.
All right.
So the line of credit is the line of credit.
Right.
Okay. If you used it all, okay, and now the house has exceeded,
Right.
or the mortgage has exceeded the value of the property,
Right.
you're only responsible to pay back what the house sells for.
Right.
The shortfall or the overage, right? The federal government's responsible to pay back.
So the federal government pays it back, right?
The shortfall.
Again,
Right.
I go back to, in my head, the house is worth $500,000. Now, I may have paid, you know, and this is the thing with mortgages, right? You may have paid $200,000 for a house, okay? I remember I bought my first house back in '94. I paid $110,000 for it, okay? That's how, was, you know, back then. Paid $110,000 for it. Now, 15 years later, I needed to refinance it. Now, my basis in the house is $110,000. I go refinance it.
Now it's worth $300,000.
It's worth
$300,000.
It's worth $300,000. So I borrow $200,000. My basis in the house is still $110,000 because that's what I originally bought the house for. What I borrow against it has nothing to do with what my basis is. So when I pass away, and a lot of these older people, they buy they bought their houses
For $15,000.
right, $15,000. Now it's worth $500,000, right? So actually no, we're going to back up on that because if it's their first home and they're over 65, then it's a one-time and they don't have capital gains on it. So
Yeah, so you mix
that
it-
that answered my question.
Right, so you mix, but you're also mixing two things. So you have the line of credit with the growth rate factor, okay,
Right.
And it's tax-free. So
Right.
the idea behind all this, right? You have a senior that spent the last 40 years saving money. He's got money in a IRA, stocks, bonds, annuities. Maybe he's got a pension, maybe he doesn't.
Right.
Right. The premise of the reverse mortgage now with the line of credit is leave those buckets of money alone.
Right.
Okay, because every time you withdraw from it, right, you're depleting your account that could grow,
Right.
and there's probably a tax implication,
Yeah.
right? The idea is let those sit there, let them grow, take out the reverse, line of credit, let the line of credit grow,
It's a tax-free way of
right,
actually supplementing your
yeah. And
income.
at the end of the day, if you do it right,
Right.
you should leave a bigger legacy for your children, because now they have these buckets of money they can divvy up.
Right.
And whatever equity, if there is any equity left in the house, they could have that too.
They can have that too.
Right,
yeah.
but at least now they spend tax-free money, right, in
Right.
the house. you know?
That's amazing. That is amazing. All right, so now the third way, right?
Okay.
We have the line of credit. We have the monthly payments. I get a reverse mortgage. I take $250. I'm eligible for $250. I take $250.
Okay.
What happens?
Okay, so in the last 4 or 5 years, the federal government has made a lot of changes to the reverse mortgage. Okay. Years ago, and they did it for two reasons. Number one is to protect the senior from themselves.
Right.
Because sometimes we're our own worst enemy. And the other thing they did is protect themselves against predatory lending.
Right.
Okay, so now today you qualify for $250,000. You can't take $250,000 on day one.
Okay.
You can only take 60% of that.
All right.
If
okay.
you don't have a mortgage, if you're free and clear.
Right.
So you can take 60% of the $250,000.
Right.
And then 12 months from now, you'll have access to the other 40,000, the other 40%. Right.
So 250, 60% is 150,000.
Right.
So I can take my first 100, and then 6 months from now I can.
Or 12 months
out.
from now, you can take the balance.
I can take the balance. So now I have my $250,000. So now what? It just sits there and there's no growth. There's no.
If you take it out,
I'm stuck at what, 250, and that's it.
Yeah, well, I would highly recommend that you do not take it out.
So out of the three, what is the most common option that people take?
Well, you have three options, right? You can take out the lump sum, the 60%.
Right.
You can set up a monthly payment, okay? Or you could just leave everything alone and take the money when you need it.
Right.
The fourth option, and this is what they all do.
You told me there was only three.
Well, now I'm mixing it up. I'm making sure you're paying attention, staying on your toes, right? Okay. The fourth option is a blend.
All right.
They draw some money at closing,
Right.
and they set up a monthly payment.
I gotcha.
Okay, so for example, I had a woman up in Bayville. She had a tenant. She was getting $700 a month rent.
Okay.
But she was getting old and cranky, and she didn't like this person coming in and out of the house all night long, doors closing.
So she wanted to get rid of the tenant.
She wanted to get rid of the tenant, but she couldn't afford to get rid of the $700 a month rent.
Right.
Right? So the attorney referred her to me and said, take out a reverse mortgage. She was so skeptical to the whole process, she kept questioning me.
Well, when you think about it, you sit there and you say, don't worry about it.
Yeah,
The
yeah,
government's
trust me,
going to take it.
trust-
Trust me. It's that old thing where, I'm sorry.
Yeah.
Like to me, it sounds too good to be true.
There you go.
Why isn't everybody doing this if it is this true? Right. To me,
that's my job to get it out there because it is too good to be true
Right.
for the right person.
For the right person.
But going back to this woman, okay, she was so skeptical, but she did the reverse. We got rid of the tenant, right? She got we paid off the mortgage, right? So this is the blend. She paid off the mortgage. She took a little cash out, and then we set her up for like $1,200 a month for the rest of her life.
$1,200 a month for the rest of her life.
For the rest of her life. Do you know this woman calls me about 6-7 times a year, and she says, Tim, they just put $1,200 in my account. Do you think I'm going to get this again next month?
Really? Because she's not sure. She's thinking
She still doesn't believe it.
she's sitting there going, somebody's got to cut me off at some point, right?
Yeah. She still can't believe it. But
So-
it's a great program for her because it solved all her needs. She's able to stay in the house.
Right.
She's able to get rid of the tenant, and she's getting a monthly check.
She's getting a monthly check. Well, isn't it the line of credit could be kind of set up like that too, right?
Yeah.
If you think about it, you got the line of credit, and okay, I'm going to take 50 out, and then on a monthly basis take 1,000 or 1,200.
I guess you can, sure. So I just had this conversation last night with a gentleman because
Right.
we had this conversation about.
Well, let's hold on before we do that.
All
right? I'm going to stick on this line of credit because this line of credit thing is
The growth rate factor?
The growth rate factor.
I'm telling you, it's the greatest thing since sliced bread.
Well, what is it? The growth rate factor it's a multiple of what?
So it was actually a unintended loophole created by the federal government when they created this reverse mortgage.
They created loopholes? The federal government?
You think? So your reverse mortgage is at 5%.
Right.
So whatever money you borrow, you're going to be charged 5%.
5%, right.
The money you don't use, okay, is a half a point higher. It's growing at a rate of 5.5%.
Wait a second.
Yeah.
So they're giving us a benefit higher than what they're charging
That's right.
us if we don't use it.
Right. Let it sit there.
So let it sit there.
And their thought process was nobody's ever going to let it sit there, right? Because
They're gonna gobble
they're
it
just
up.
going to gobble it up,
Right.
right? So my point and why I want to get out there and educate is use it as a retirement tool,
Right.
not to use it. Use it as a safety net for if and when you need it sometime down the road.
Yeah, because if you're just taking now, let's go back to your other scenario where you had the couple, they took 75, right?
Mm-hmm.
Then it grew to they had another 75, but it grew to 161,000.
161,000. Yeah.
And now all of a sudden they needed all these other things, and they needed to draw down more money than a normal monthly payment would be. if I took the monthly payments, would there be a way for me to get a chunk of money? Like say for example, all of a sudden now I needed home health care.
Okay, so for
or I
example,
needed-
you and I did a reverse mortgage. You closed your loan. You took out $1,000 a month for the rest of your life.
Right.
2 years down the road, you said, "Oh, I don't have enough money to pay my taxes. I need $10,000."
Right.
Yes, you would call up the servicer.
Right.
You say, "I need a check for $10,000." Okay, they would send you a check for $10,000. What they would do then is they'd recalculate.
Right.
So maybe now you're not going to get $1,000 a month. Maybe you're going to get $975.
Right,
Or
okay.
$950 or something.
Right,
You know what I'm saying?
right.
But it's all within the parameters
parameters.
of what you qualified for.
Okay. All right.
Right?
Okay.
But yes, it's very flexible.
Because that's my
yeah,
question is
yeah.
right. If
You're not locked into that.
right,
Yeah.
it's one of those things where it's like, okay, well, if I choose this option,
Right.
because people will be thinking like that. They'll be
Yeah.
going, hey,
Am
you
I
know what,
locked
right
into this now?
Right
Right.
now, I'm going to get $1,000 a month for the rest of my life. That's great. Well, what if something happens? Because he said on the line of credit,
Yeah.
you know, I can.
So let's say, for example, the husband and wife.
Right.
Right? He makes $1,000 a month in Social Security. She makes $1,000 a month Social Security. They're getting $1,000 a month from the reverse.
Right.
One of them passes away.
Now they
lose their
lose
Social
it.
Security. Now they can call up the service and say, "Listen, I need another $1,000 a month,
right.
to make up for their loss of income."
Right.
Right. So it's very flexible as far as that line of credit is.
Okay.
Right.
All right. That's fantastic.
Yeah.
You know, that's again, it goes. It sounds too good to be true. So if somebody really wants to, get some information,
It's-
and look, I all the attorneys out there, anybody that works with elderly people really should be aware of this situation because we know, our parents, because our parents are in that age. Our parents, even grandparents that may be still alive, they may be struggling, and they have an asset that they can use for this type of situation.
The key is where do they want to live?
Right.
And when I sit down at the kitchen table, that's the first question I ask. Do you want to live here for the duration of your life?
Right.
And sometimes I'll get as blatant as, "Do you want to be carried out of here feet first?"
Right.
And they laugh.
Yeah.
But if they have any inclination of selling the home and moving in with a child, or selling the home and moving to Florida in the next year or two, I'll tell them, "No, a reverse isn't for you.
Right.
Sell the house today and go to Florida.
Right.
Don't wait till 2 years.
Yeah, don't wait till 2 years, yeah.
But if you plan on living here for the rest of your life,
Right.
then a reverse makes sense.
Yeah. I have a friend of mine, he just moved down to Delaware. His mom is 94 years old, and she lives on the island, and she's not going anywhere.
Right.
She
Listen, they're
that's
comfortable
it.
where they are, right? They got the hairdresser, they got the doctor, they got the deli, they got the card store, the candy
Right,
store.
exactly,
That's
yeah.
where they raise their children. That's
Yep.
where the grandchildren come to visit them.
Yep.
That's their home. you
Yeah,
know?
and that's really what it comes down to is, as we know, as they get older, they tend to get. And somebody was explaining this to me one day about as you get older, you get more afraid, even though you've been around for as long as you have. So they get more comfortable in their existing environments, and they don't necessarily want to move. So
I just did a reverse mortgage for a woman that was 102 years old.
102.
102, and she was running out of money.
But how does she qualify at 102?
Well, 'cause she had a Social Security, she had a pension,
Right.
she had a free and clear house.
Okay.
Okay, and
Well, that's it. Okay, so let's say she had a Social Security, she had her pension, she had a free and clear house. If I have,
she paid her bills, paid her taxes and insurance.
Okay.
So the situation was, she had 24-hour, 7-day, 365 days a year home care.
right.
They couldn't afford
At
that.
102, she needed that.
Right? So, and I talked to her. I said, "Well, listen, if you think you're going to pack me up and move me into an assisted living, or
No way.
I'll never,
Yeah.
we'll never survive that." She goes, "I want to live here."
Right.
We worked it up that she didn't draw any money out,
Right.
right? But she's going to get $10,000 a month on the first of the month,
Right.
every month, for as long as she lives, right? And that's going to take care of the household
Right.
and pay for the home health aides.
Yeah.
And she's able to stay in her house
Right.
for the rest of her life, where she wants to be.
Yeah.
And she deserves to be there.
Right.
You know,
right.
that's her
So you
home.
have to have I would say a good credit rating.
No, not necessarily.
Okay.
You need to, today with the financial assessment, we're looking at ability and willingness.
Okay.
Are you paying your taxes and insurance on time?
Right.
Do you have a mortgage? Are you paying your mortgage on
Well,
time?
if people are struggling with their money, right? Especially if they're retired now and they they have a minimal pension and they have Social Security and they do have this house that they're free and clear, but they're having trouble meeting all of their bills.
So we're not when you say good credit score, we're not FICO driven.
Okay. That's really what I was
So
getting
we're looking at payment history. We're looking at payment history on the taxes.
Right.
We're looking at payment history on the mortgage and any payment history on revolving debt or installment debt, right?
Right.
And it's more of an overall picture. Like you and I get a mortgage.
Right.
What's your FICO score?
Yeah, what's your FICO score? And you were late on this one credit card
with the
10 years ago.
With the reverses, it's more of a financial assessment, an overall review of what they're doing.
Okay.
And what we want to do between the Social Security and the pension and whatever monies they have, okay, and their bills that they have at the end of the month,
right,
with the reverse, do they have enough money to pay their bills and eat? And that's financial assessment.
Okay.
Okay. And the other thing they did with the reverses, let's say, for example, you're sloppy, like where you were headed to.
Right.
They're not paying their taxes, or they are sloppy with the mortgage. What we did, or what they did with the reverse mortgages the last 4 or 5 years, is they've now created the financial assessment with a life expectancy set aside.
Okay.
So we're not necessarily going to decline you for the reverse mortgage because of the sloppy credit.
Right.
But what we're going to do now is we're going to give you the reverse, but we're now going to hold money aside, and we're going to pay your taxes and insurance for you.
I gotcha.
Okay.
So if I say, okay, I need $1,000 a month, you may say, okay, but we're going to take $100 a month out to pay your taxes.
Yeah, it's not. Yeah, it's based off of their how old they are.
Right.
Okay, what their taxes and insurance are.
Right.
And then they'll hold that lump sum money aside, so we know that their taxes and insurance are being paid.
Right.
The last thing we want them to do is go into foreclosure because they didn't pay their taxes and insurance.
Well, you're right. And that goes back to what you were talking about before with, we don't want no predatory lending, right?
Right.
And for those of you who don't know, predatory lending is somebody's lending you money so they can take what you got, right? And that's what we're trying to avoid here.
Right.
So you got, and we can go through all of this here you got basically 4 different options on doing this. So we got a line of credit, we can take a lump sum, we can do
a little bit of both.
A little bit of both, right? We can do a monthly payment, we can, blend it all together, as you said before. So for those, what if I have enough money and I just want to do a reverse mortgage?
Why not? It's a safety net.
So it's
you don't know. I was talking to this guy last night. He goes, I got plenty of money. I got a pension. I got this. I don't need it. I said, listen, you're 63 years old.
Right.
You have no idea what's going to happen 10 years from now or 20 years from now. But if you took out that reverse just as a safety net, and if you use it, great. And if you don't use it,
it grows.
God bless you.
Right.
But if you don't use it, so what?
Right.
You sell the house and you take the equity with you.
And you take the equity
with you. It's a
with you.
safety net. It's all about longevity.
Right.
Right? We spend X amount of years accumulating our money so we retire.
Right.
When we retire, right, this is where it gets tricky. We start dispersing that money.
Yep.
And if we start dispersing it at a faster rate than we should be, we're going to run out of money.
Right.
Seniors today, they're not afraid of dying.
Yeah.
They're afraid of outliving their money.
Right. Yeah. Exactly.
And a reverse mortgage with that line of credit could help them sleep at night.
Right.
And give them that peace of mind for when the now what hits.
Right. So here I got a scenario for you. I'm going to throw a scenario at you and see how you handle it.
Listen, I'm a CRMP. I know
Yes,
what I'm talking about.
You are one of the elite. So let me throw a question at one of the elite people in the country on this. You got situations now where you get 2 people that are older, divorced, right, from different people. They don't get married, but they buy a house together.
Yeah.
All right. One of them dies, but their wills say that their house or their estate is going to go to their children, not their significant other. So you do a reverse mortgage on it in a situation like that, right? Where now 50% of the house is no longer owned by.
Yeah, but that's a loaded question. Did they have the reverse before? Did they have it reverse after it?
Well, here's the thing.
Yeah.
I'll give you a full
simplify
scenario.
it.
I'll simplify the scenario for you. You got 2 people. They got divorced in their 40s. They met early 50s. They bought a house together.
Okay, so now they bought the house together.
Their wills, before they got together, okay, they did their wills. And their wills, everything went to their kids. They never redid their wills. They bought the house together.
Sounds like an estate issue.
Sounds like an estate issue, right? They did a reverse mortgage.
Okay.
All right. So now her estate, say she passes, her estate now says that her half of the estate goes, or her half of the house now goes to the kids. They have a reverse mortgage on this.
Yeah.
What happens?
Is he still alive?
He's still alive.
So he gets to live in that house.
Right.
Okay. And then when he passes away,
Right.
okay, the reverse mortgage has to be paid back.
So in the reverse mortgage, is it guaranteeing that nobody can kick you out as long as you're paying the bills?
Well, guarantee is a tough word, right?
Yeah.
But as long as you're living in the house,
Right.
you're paying your taxes and insurance,
Right.
and you're maintaining the property to the best of your ability,
Right.
okay, then yes, it's your house, you're going to live in
Then
it.
her kids fighting with him over the estate and stuff like that, it doesn't matter.
I don't think they can, yeah, that's an estate issue. You
That's
know,
an estate issue, right.
All I know is the reverse part of it, right?
Right, right.
I'm not that smart to be
Well,
an
so I mean,
local attorney.
like the lender is not going to go, okay, now the owner,
Absolutely not.
is
It's his
wh-
house.
it's
Still his house.
right. It's his and her house, right? So
Yeah, but it's his house now.
Yeah, but the half owners now are younger than 62.
Yeah.
So remember I told you how fast the time is going to go? So we're getting down to the end here. It's like, wow, it's like it's
Crazy
just,
stuff.
It's
We
crazy
touched on a
stuff.
lot of stuff.
We touched on a
and
lot of stuff.
It's overwhelming. you
Well,
know.
it's a lot of information here, Tim, and you know what? You can't get to it all
Yeah,
in
you
one
can't
night.
get to it all,
You
right.
can't. So, again, for all of those people out there watching, how do they get a hold of you?
Okay, very simple.
right.
I got an email address. It's tim.kennedy@usmortgage.com.
Say that again.
Tim.Kennedy, I'm sorry, at usmortgage.com. Office number is 631-750-0520. 631-750-0520. And I got a cell phone too. Surprise, surprise. 516-729-6040. 516-729-6040.
All right, fantastic. Now, let me ask you this question. You said before U.S. mortgages in 47 states. What states are you not in?
Oh, it's on the card.
It's
I have
on the
no
card
idea.
here, right?
Look on the back of the card.
Okay, so is Oklahoma one of them?
I think we're in Oklahoma.
Oh, you are in
we-
Oklahoma.
We have a branch in Oklahoma.
Okay, so I only asked that question because the first few guests we had, there was always some kind of quirky connection with Oklahoma.
No.
And I just wanted to make sure U.S. Mortgage was in Oklahoma and people can take advantage of it there.
Yeah,
So,
we're there.
so Tim, tell us a little bit about other things that U.S. Mortgage is involved in. You know, from what I understand, you guys are
Well,
a very large corporation. And
our-
you do a lot of
our-
different things.
Our motto is helping you make it home.
Right.
Okay, and we've now joined Habitat for Humanity, and it just so happens tomorrow we have a build in Bayshore,
Bayshore.
Long Island.
So
Yeah.
you're going to strap on the old tool
I
belt?
got the tool belt, right? I mean, I can't drive a nail to save my life, but I'll be serving Kool-Aid up to the workers, I guess, right?
Yeah, you'll be doing
Right.
that. Well, fantastic. That's great. So, I mean, is there a family set already for this home, or is this they build the home? How does Habitat?
Now, there's a family, I'm new to it myself, but there is a family.
Right.
When we saw the brochure, she talked a lot about herself, her mom, her children,
Right.
and the difficulties living on Long Island and the affordability.
Right.
And she applied for Habitat for Humanity.
Right.
And she qualified.
Yeah, and for those of you who don't know, Habitat for Humanity builds homes for those less fortunate, those people who can't afford homes, or is living in disrepair
Squalor,
and
yeah.
squalor and things like that. So what they do is they get companies like Tim's company and other companies. Actually,
Okay.
I'm in the Air Force Auxiliary, so
Okay, all right.
and I work with a lot of veterans and things like that. So I got a lot of close friends that are military,
Yeah.
and
God bless 'em.
retired
Yeah.
military. Yeah, and we thank them for everything that they do. So I want to thank you for being on the show.
Thanks for having me.
All
I
right,
really appreciate it.
It was a
Thank you.
great
It was an
time.
honor.
Yep.
Thank you.
Yep, and we
All
got to
right.
do
Thank
it
you very
again.
much. Yep,
All
will do.
right.
Thank you.
Thanks, Tim. All right. So we want to thank our guest, Tim Kennedy from U.S. Mortgage Corp, for coming on tonight. You know, it wasn't as much fun as you think because Norm wasn't here, but we had a good time anyway. So I want to just let you know about a couple of things that are coming up. On August 21st, I'm going to be a guest speaker, or actually part of an expert panel at Stony Brook University Small Business Development Center. It is August 21st, starts from, it's a 9 to 11, and we're going to be talking about trade show booths and tips from everybody on the panel on how to work a trade show. For all of us that have ever been to a trade show, and I'm sure, Tim, you've been to trade shows, right? You know, you've been to a trade show. You get these people that, especially now, are millenniums. You know, if you're watching tonight, give you a couple of tips. The key to making a trade show work for you is not to sit behind the table doing this. So that's one of my tips that are going to be talking. Well, we're going to be talking about that. We got some great experts that are going to be on the show, actually doing this panel. But 8:30 is refreshments and registration, and the panel begins at 9 o'clock. And that's the Stony Brook Small Business Development Center. So you can go to LongIslandSpeakersBureau.com to sign up for that. So we're looking forward to that. Next week, hopefully Norm will be back with us. If not, we will be here. So we're looking for a good show next week. And we want to thank everybody for tuning in tonight. And everybody have a great week. Thanks for joining us tonight, guys.
Today's show is brought to you by Friend Entertainment USA, producing the best concerts for charities and corporations for over 30 years. And CBMS Consulting Services. Control your business before it controls you. In association with Area 22 Productions, your multimedia streaming network. If you're interested in being a guest on our show, visit our website at www.bphdmm.com for more information.